it's Adil bringing you a review of the US markets, a weekend review from an inter-market analysis perspective. Okay, right, where are we? Okay, so interesting so far, obviously with the US markets continuing to make highs, or shall we say stalling at the highs. Okay, as you can see on the S&P 500 chart, if I were to bring that up for you, you can see that there's 3 consecutive dojis now. Obviously you've got this key trend line resistance as well, so if I were to delete this, you can see 1 doji, 2 doji and 3 dojis. So there's certainly exhaustion. Okay, I mean you can even call it 4 dojis there. So basically we are coming into exhaustion. The market certainly coming into exhaustion, and we'll certainly try and work out as to why that's the case. Okay, now with regards to fundamentals, that's something that I always like to cover first of all. The economic data out on Friday obviously was stronger than expected with regards to retail sales. Obviously that's good news, as we all know, because of import prices were dropping, and we all know why import prices are dropping, and we all know why retail sales are higher. It's because of gasoline and oil. Okay, so that increases your disposable income, therefore it allows you to go out and obviously purchase and consume more. Okay, so that's basically the case there. Now, is that all factored in, given the fact that the market's putting in 3 dojis in a row? One could argue yes, because the market obviously is always front running. It's an efficient discount mechanism. So whenever you have good news and the market becomes immune to good news and no longer fails to push higher, then that generally is a sign that the market is certainly potentially topping out. Okay, so bear that in mind. Now, the main variable that we should all be observing, really, from my perspective, is the USD JPY and Euro JPY. Also NZD JPY and obviously Aussie JPY. So if you look at the Aussie JPY, you can see that there's a double top on the 10-minute chart. Okay, so given the fact that it's all about the yen, okay, we are coming into potential resistance zone here. Ideally we need to observe on the weekly chart, really, and we are potentially coming up. I mean, 104 is probably a key level to watch. 104 level, watch out for that. So I should say the 10,400 level on the Aussie JPY will be key, so keep an eye out for that. Okay, so also with regards to the Euro JPY, you can see here potential resistance on the Euro JPY. You're looking at a daily chart, will give you more of an insight, and you can see here double top resistance. So certainly argument here now for the Euro JPY to be coming into resistance. Now we all know why this resistance level is here, because there's debate with regards to the sales tax. Okay, not only is there argument with regards to the sales tax hike, there's also argument with regards to any potential additional easing. So I think we've got some GDP data out on Monday. So basically there's that argument, and obviously there's argument of whether or not the JPY has fallen much too quicker than everybody expects, and that obviously is certainly a factor as well. So they'll obviously have to start to talk the yen up as opposed to down, and certainly has had quite a considerable effect. I mean, think about given the fact that it's risen from almost 1,000 points now, or 1,000 pips, from 13,600 to almost 14,600. So that in itself should have had the desired effect, and given the fact that they are using the pension fund to increase global equity holdings, that in itself is obviously the reason why the markets have obviously gone and made new highs and continue to make new highs in the US, although there are signs of exhaustion and potentially stalling now. So obviously Euro JPY is into a resistance, so that's something that you certainly need to note down. Now the USD JPY, sorry, obviously with import prices being subdued, that doesn't help the US dollar side of the equation, hence the reason why you're seeing weakness here post the data. Okay, let's have a look at the market on a daily basis. Daily basis, nothing really showing in terms of resistance there. Weekly chart, really, I mean, you do have a resistance in this zone here. Ideally you'd have to probably go to a monthly chart to really observe this. Okay, so you've got this key trend line resistance here that we are almost approaching into. Okay, we seem to be in no man's land at the moment, although you do have previous support equals resistance around this zone. That's something certainly worth watching. Okay, and you've got horizontal resistance here. So nothing really on the monthly chart either that you can concretely say yes, this is potentially coming into resistance, given the fact that the US dollar, the retail sales were stronger than expected, so that helped the dollar, but the import prices were relatively weak, which obviously doesn't help the dollar. So in terms of the interest rates, I mean, there's something there that I've copied with regards to the economy shaped 2 years, etc., etc., etc. Most of the gain was Treasury prices were boosted after the University of Michigan Reuters preliminary consumer sentiment index for November showed consumers' long-term inflation expectations had fallen from 2.6 to 2.8%. Analysts said that will further encourage the Fed to be patient before tightening, etc., etc., etc. Okay, so that's basically what we're all talking about. Comments about retail sales, etc. Falling oil prices contribute to a 1.3% drop in oil import. Okay, so basically the commodity side of the equation, given the fact that there's deflation potential there, although that certainly is factored into a large extent now. There's a chart that I actually shared with regards to the US dollar index, which is very important. Okay, let me just bring that out for you. And the US dollar in being into its weekly resistance, as you can see here. You've got a potential double top, triple top in the US dollar. So we've created a doji there as well. Okay, if you go to your daily chart, certainly indicates exhaustion and potential resistance there. And this is quite interesting. It's the fact that the dollar index is moving in concert with the US market. So as you can see, US market gone higher, dollar gone higher. When the dollar's into resistance, the US markets are now potentially going to be in resistance as well. So just bear that in mind. That's going to be quite interesting observation going into next week. Okay, so USD JPY certainly seems to be potentially argument here for potential stall. Although every other stall certainly has taken out a whole double top, triple top, and then has reversed. What's important though, we do have an unfilled gap below at the 112 level, 112.20 around that region. Okay, so that's something that we'll keep an eye out for. For now, it's premature for me to say we have a top in the USD JPY. One obviously can't argue that at present because the trend certainly still remains solid until we see more further evidence of a potential reversal. Although one could argue, I mean, this is something I was looking at before, is that you have a rising contracting wedge pattern, and that in itself is bearish, given the fact that we break here, given the fact that the the S&P 500 has put in 3 dojis in a row, or 4 dojis in a row, and I'll come on to further evidence of a potential top in that soon. But yes, food for thought. Watch out for this potential 4-hour wedge. Okay, so the argument is all about sale tax. Okay, sale tax hike or delay in Japan. Obviously, if that's denied, then as we all know, the yen will strengthen and USD JPY will certainly start to fall. Okay, watch out for that relationship, and like I said, Euro JPY being into that resistance zone, that's going to be very, very interesting as well. Okay, going into next week. So if I just bring up the chart of Euro JPY again, where are we? Okay, there. So that's going to be interesting. Euro JPY into resistance in the 4-hour chart on the USD JPY, rising contracting wedge pattern. Okay, if those two hold as resistance, that equals US stock market top. That's basically in a nutshell. Okay, if they continue to move higher, then expect the markets to move higher. Full stop. Okay, that's basically the way in which I interpret it. I'll be doing more analysis on the European markets, and I'll be able to tell you exactly what I think what's going to happen there. And hopefully I'll be able to elaborate and give a better understanding of my perspective going into Monday's trading. Now, with regards to my trading last week, absolutely fantastic, phenomenal. I think I netted around 280 points or 270 points for the week. I can't argue with subscribers, all in real time. Real entry, real exit, commentary, analysis, etc, etc, etc. So those of you that want to join the live analysis service, then certainly come. You're more than willing to do so. I do offer a 1-week trial. You just need to click on the free trial here, okay, and follow the instructions there. All I need is your mobile number. Please download WhatsApp onto your phone. I'll add you to the email database. You'll get email alerts with analysis, TA, FA, intermarket analysis, charts, etc., explaining all my trades. And like I said, you get entry and exit, and each time I enter and exit. And I also provide explanation so that you're actually learning something. You're not just following somebody blindly. You're actually learning as to why you're taking the trade, why you're exiting the trade, and obviously the reasons why, fundamental reasons why that trade is going to move, technical reasons why that trade is going to move, intermarket analysis reason as to why that trade is going to move. There's a video on there. If you click on live analysis service, it explains exactly how I operate, and it's a short video explaining that as well. And if you go further down, you can certainly read the testimonials. Having said that, there is a better testimonial on Twitter right now. There's a chap by the name of Tony who's actually basically he's joined the live analysis service, and he's been tracking my trades on a daily basis. So you can certainly have a look at that. The website for that, which is pretty comprehensive and well written, okay, very user friendly and easy to follow, is tradingfromhome.co.uk. okay, tradingfromhome.co.uk. Okay, so have a look at that, see what you think. Okay, so back to what I do, day trading. Okay, so fundamentals. Okay, yes, everything is hunky-dory so far in terms of economic data. The data on Friday from Europe was obviously slightly better than expected, and obviously averted any real concerns with regards to growth. Okay, although yes, the European markets did come under pressure, but having said that, you have the euro around the 125 level, which really in essence is helping exports and should technically be helping the euro. And obviously you've got the QE carrot being dangled as well, obviously ABS purchases as well, so all of them should certainly be helping Europe. Okay, well, whether you want to argue that obviously the Japanese QE has certainly taken away the exports from Europe, even though that their euro is lower, that can certainly be argued. Okay, that's why maybe Europe is lagging in terms of Asia moving higher and the US moving higher. Okay, so there's two factors as well, just again food for thought. But having said that, the US data was obviously strong. US market sneezes, we all catch pneumonia, so everything seems to be fine so far. Okay, from that perspective, and I'll go into Europe and I'll explain as to what's going to happen in Europe. But basically, from my perspective, I am tilted heavily towards the bearish side at this very moment in time. Reason why? Because the economic data on Friday failed to move the market higher. The economic data out of Europe on Friday again failed to move Europe higher. Okay, the lower euro again failed to move Europe higher, and also with regards to US markets, the Japanese, or should I say the yen, USD JPY and Euro JPY moving higher again have failed really to move the US markets really higher significantly, given the fact that the S&P has put in a doji. So if you add all those factors into play, now not only that you also have to add in geopolitics. Now over the weekend we've had some concerns with regards to Mr. Putin leaving the G20 conference early. Okay, that's not a good sign. That's a very negative sign. Mr. Putin intends to leave the G20 summit in Australia earlier than scheduled. The crisis in Ukraine has overshadowed the G20 summit. European leaders called on Russia to stop supplying separatists and warned possible further sanctions. So that's negative, okay? And that's one of the reasons why Germany has been negative, because of their obviously exports. A majority of their exports do go towards Russia, and there are sanctions on that, which obviously is not helping them in terms of their growth and their ability to move out of this stagflation. Okay. Now, NATO Secretary General accused Russia of bringing artillery, tanks, etc. Obama called Russian aggression in Ukraine a threat to global security, and in a speech at Queensland. So, and Mr. Merkel, who was meeting along with Putin, told reporters the situation in Ukraine is not satisfactory. So you have the Russia-Ukraine situation brewing as well. Also, you had Mr. Baghdadi, the absolute imbecile, moron, buffoon, misguided, deluded extremist. Okay. Fanatic, basically, idiot from my perspective, basically, who basically has accused and warned the US of aggression, and claims that he wants to fight back with, God knows what they're going to fight back with, idiots. Okay, so basically those morons, brainwash idiots, so basically have, as you can see, I absolutely detest them, I can't stand them, stupid petrodollar funded Wahhabis from my perspective. Okay, so yeah, it's a shame. But yep, they are misguided, so obviously somebody needs to quash them like a fly. Basically, they obviously have increased their rhetoric, which again is negative, and that's one of the reasons why you've potentially seen an oil reverse or rebound, and you should be seeing one next week, and that's why you've seen gold move higher as well, although they are blaming it on, or not blaming it, but are claiming that it's to do with one of the central banks and their gold holdings anyway. So that's basically the situation. So watch out for Russia-Ukraine rhetoric as well. Watch out for the ISIS situation, obviously potentially brewing again, and obviously geopolitics should take center stage, and that in itself will be used as an excuse for the markets which are already exhausted, to sell off. Okay, now let's have a look at the technical picture then with regards to US markets, and let's see exactly what's happening here. Okay, let's start with the Dow. Okay, Dow is always an interesting index to observe. Okay, so let's have a look at the daily chart first of all. Daily chart, okay, we have a potential doji on the daily chart. Okay, yes, we've broken out to new highs, so one shouldn't get too excited for the short side, although this move here is quite stretched. One could have argued that this move was stretched here, this move was stretched here, this move was stretched here, and the move continued to be overstretched. So certainly for me to just base my argument on shorting the market on the daily chart is very weak, and just on one index is very weak as well. So we are going to look at several. Okay, so now let's look at a 60-minute chart of this Dow. 60-minute chart is posing to be quite interesting from my perspective. Just keep an eye on this potential HNS. You do have a small HNS here, but from my perspective, just keep an eye on this pattern here. If this obviously starts to break down, then obviously starts to indicate exhaustion or weakness, then that's going to be very interesting. Okay, now let's have a look at the Dow Transports, because obviously they confirm the strength and weakness of the Dow Jones. So let's just have a look at that for now. Okay, okay, so we have another doji here, as you can see, another doji. So this is again very interesting. We have a doji again, so very interesting, folks. Okay, so how do we interpret this? Okay, so let's have a look at the small time frame. 60-minute chart, generally the one that we look at. As you can see here, you do have a potential triple top resistance, exhaustion again. If you connect this together, you're looking at a sideways trading, so either we break out or we break lower. Okay, so that's something that's going to be something that we need to observe. From a trend line perspective, yes, we have broken, and this is quite important that we've broken this this pattern here, and we are looking for either consolidation for the next move higher, or obviously consolidation and breakdown down to the 200 MA. As you know, my bias is certainly indicating down, but again, we certainly need to look at more evidence. Okay, so certainly some signs of exhaustion there. Okay, so let's just corroborate that and verify that by cross-market analysis, i.e. intermarket analysis. So if you look at the S&P 500, as you can see, 1, 2, 3, 4 dojis potentially there. If you look at a 60-minute chart, you can see here that we've got signs here now for a yeah, we've broken out this key trend line resistance, as you can see. Okay, so let me just get rid of this. Okay, you've got gaps that you've left behind, so we need to close these gaps. As we all know, traders, whenever you leave unfilled gaps behind, they always act as magnets for price action. Okay, so what pattern do you see here on a 60-minute chart? I mean, this is everybody's favorite, isn't it? A HNS formation. Okay, so you've got your head. Now, obviously, the Friday, even though we had the economic data come out, etc., we failed really to continue to go on and make new highs, and that's basically where we are. So even though we had the stronger retail sales, we failed to move higher. Import prices lower, i.e. higher disposable income again, and obviously the Fed being on a standstill with regards to tightening rates, etc., then and the market still failed to go higher. So that tells you something. Now add in the fact that the USD JPY and Euro JPY are now potentially at resistance. What does that tell you? Okay, what does that tell you? Okay, what does that tell you? Think. Okay, so all you're doing now is trying to fit the jigsaw pieces together and look for a potential direction in the markets. The more variables you observe, the more cross market analysis you do, the higher the conviction rate, the higher the success rate, and obviously you're reducing the margin for error. So HNS formation in the S&P 500, all eyes on that HNS formation. Okay, now if I just look at this here for you, look at a 10-minute chart. Okay, so I mean, you've got some gaps. So my focus really for next week, watch out for this gap at 1995. Okay, watch out for the gap at 1995 on the S&P 500. And obviously this is your HNS formation. You're looking at your left shoulder here, perfect head, consolidation, right shoulder, bang, down we go. Okay, now you're looking at using your fib, taking the pivot high, take it to your neckline, and we've held a 75% resistance. That's all you need to know for the right shoulder. Okay, now you do have a HNS within a HNS, so your right shoulder is also a HNS. So if you can just go ahead and draw your neckline, you can see here, your left shoulder here, your head is up here, you retrace, right shoulder, bang, down we go. Okay, so you have a HNS within a HNS, take it to the neckline. Again, we've held a 75% resistance for the right shoulder, so therefore down we go. And that's all we need to know. Okay, so how do we verify this pattern? We verify this pattern by looking at the Russell. Okay, so Russell 2000. Now, what does the Russell 2000 tell you? Oh, this is getting easier and easier. Okay, now Russell 2000 has failed a gap fill resistance. Not only did it fail, it's actually confirmed the failure. It's horizontal resistance plus gap fill resistance. Okay, and horizontal resistance in this zone here. Okay, and you've had a bearish engulfing candle. What does that tell you? Think. Given the fact that this has been a weak link, okay, when the weak link was no longer the weak link, the stock market rallied. When the weak link starts to become the weak link again, what do you think will happen to the stock market? It obviously moves lower. Okay, so watch out for potential move below. So the first move that you're going to look at the Russell is going to be gap fill. So on a daily chart, as a trader, you want to look at gap fill, and your gap fill level is 86.3. Okay, on your IWM. Okay, so watch out for that. Okay, so your Russell. Now your 60-minute chart, we can zoom in, and abracadabra, what do we see here? You see a H&S formation. So what does that H&S formation do? It confirms a H&S formation on the S&P 500 on the 60-minute chart, and this right shoulder is even weak. I mean, look at it, it's ready to fall ASAP. It doesn't even want to stick around. Okay, and the first gap fill you're looking at is the 86.3 down below. Okay, so the Russell confirms a weakness in the Nasdaq. Sorry, the Russell confirms a weakness on the S&P 500, and as you know, we've already seen we've already witnessed resistance levels. Okay, we've already seen resistance levels. Okay, on the Dow Jones. Okay, so that's something else that you certainly need to take into consideration. Okay. Now let's have a look at the Nasdaq. Okay, this is going to be an interesting chart. Okie dokie, so Nasdaq. So let's start with the daily chart first of all. Okay, daily chart, one can argue, I mean, other than the fact that you have gaps below that are creating are being a magnet for price action, you can certainly argue this is bullish and this market is continuing to move higher. One of the reasons that's propelled this market higher is obviously the Alibaba move higher and the earnings from Alibaba. Obviously have helped Yahoo and everybody else, given the fact also with regards to Apple and its iPhone 6, and also one of the main reasons why I think this market really did propel higher and failed to close that gap at 4100 was cheap oil prices, obviously higher disposable income, therefore you have more money for gadgets and toys. Okay, so that's one of the reasons I'm looking at from that perspective, especially for smartphones. Okay, and going into Christmas as well, one can argue obviously the Nasdaq generally tends to get a bid. Okay, so 60-minute chart, certainly no argument here for a potential reversal yet, anyway. Okay, I can't see anything other than this, obviously this potential trend line, one could argue. Okay, let's just keep observing for now. It will be very naive of me to say that we are into resistance other than this obviously double top resistance that we can see here. If you look at a 10-minute chart, 10-minute chart again is horizontal resistance. We've closed a gap, and there's certainly resistance there, so we're going to watch out for that. So all we can see for now is horizontal resistance. Okay, so you've got horizontal resistance here, horizontal resistance here, horizontal resistance. Okay, now let's go and look at the cross-related assets with regards to the Nasdaq. Okay, the first one is going to be semiconductors. Okay, semiconductors, if you look at a daily chart, one could argue, yep, we are still into resistance, we're holding that resistance, and we haven't really moved from there. If you look at a 60-minute chart, one can argue that we were going to have a potential breakdown at one time. Obviously, the market hasn't broken down. Okay, so that's something that we're going to keep an eye out for with regards to the market. Okay, so 60-minute chart at the moment, we've held that resistance. It would be very naive of me to say that there is a potential H&S. At the moment, there isn't nothing from that perspective. The only thing that I could potentially do is obviously draw in this level here and argue that we are going to have some potential symmetrical wedge breakdown. The fact that we haven't put in a higher high is a worrying sign. Okay, so you're looking at resistance here, obviously this resistance level here, therefore certainly weakness. Given the fact that the 20 MA has stopped the slope higher, stopped sloping higher, and we are potentially looking at the 200 MA getting tested below. But again, it's early days, and I don't really want to obviously project too far out. It all depends on how Asia opens and the reaction with regards to the yen, like I mentioned earlier. Okay, so let's have a look at the biotech, see if I can see any type of weakness. And this is the index that's going to be very important. Okay, this is the index that's led us higher, so this will be the index that will lead us lower. Okay, same with the Russell I explained before. Okay, so as you can see here, you've got a bear flag playing out. So you've consolidated here. We're going to move lower. What we're going to do, we're going to test this previous breakout. Then when we test this previous breakout, or potentially even the gap level here that needs to close at 28.20. Okay, this will obviously, given the fact that you've got net neutrality now, the debate on net neutrality certainly is on one argument against the Nasdaq. Okay, and we'll see exactly if there's any more going into next week. The charts are telling you that there's definitely some sort of bearish either news flow with regards to Russia, Ukraine, or there's some sort of negative earnings release, etc., that may well put a damper on things. Now we already know with regards to Twitter being downgraded to junk status, okay, so again that's negative for the industry as well. Cisco earnings did miss, so again that's negative for the industry, but again we'll wait and see. I can certainly look at the chart of Apple and certainly look for potential signs there, but then that will make the video too long, which to be honest with you is already too long at present. If you look at the chart of Apple yourself, it has, I mean, it just certainly looks bullish on the daily chart, and it certainly has overextended. One could argue for a potential pullback, so the gap fill at around the 100 level. But again, that'll be very premature of me to do so. Let's just see exactly what happens and take every day as it comes. Yes, okay. So let's just see what happens with regards to that. Okay. So the next chart that we're going to look at, and as you can see here, you've got. Okay, so the next chart that we can look at potentially is let's just have a look here. Okay, so the next chart. So yes, just bear that in mind. Okay, this is going to be the chart that will send the Nasdaq lower from my perspective. Okay, so that's basically what we're looking at from there. So there are other charts that I look at the US market to confirm whether there's strength or weakness, and one of those is the DAX. Okay, given the fact that the DAX has a bearish, as you can see here, the weak growth in the DAX hasn't, in terms of the GDP number. If you just look at your daily FX calendar, have I got it around here anywhere? 1 second. Okay, so this is your daily FX calendar. One of the concerns with regards to the data on Friday, this is one of the reasons why the markets were going down and reacting negatively, or was it Thursday, sorry. One of the reasons was that German data, let's bring up German data, manufacturing, here we go. No, this is not this week, it's next, this is projecting next week. 1 second, so this week, here we go. So you want this week, okay, so this is Friday. What are we doing? Oh, 1 second. Previous week, that's what I want. So we're looking from the 9th of November onwards. Okay, so the data, it was a Friday, so yeah, why am I getting confused? Okay, so the data, obviously, Italy was negative, but not very good at all. Okay, so that itself is a damper on the Eurozone. The German data was expected to come out 1.4, came out 1.2, and obviously that in itself is negative. Okay, so not good news. Okay, so certainly not good news, not what everybody was expecting, etc., etc. So given the fact that the DAX has a bearish, as you can see here, has a bear flag and wants to close the gap below, and given the fact that the DAX hasn't exactly been trading positively, as you can see here, let's go to a chart for you, a 60-minute chart. You can see that we've got to close this gap below, and we are making lower lows and lower highs. Although one can argue, yet we have potentially made a base here, but given the fact that that gap is below, and we have the biotechs weak and the Nasdaq into resistance, then certainly there's an argument here. Given the fact that Euro JPY, USD JPY are into resistance as well, and this unfilled gap below needs to close, you've potential tests of the 200 MA. Okay, so all those variables added together doesn't bode well for the Nasdaq itself. So that doesn't bode well for the US markets. Okay, now let's have a look at a few. There's 2 more indexes that I look at. Is Russell 3000. Okay, as you can see, 4 dojis in a row now. Okay, on the Russell 3000, and you have a H&S formation there as well, and you've broken out this potential channel. So there's your chart there, and as you can see, we've broken out. But my main concern, or my main focus, will be on the H&S. So given the fact that the Russell 3000 has a H&S formation which is similar to the S&P 500, again confirms the weakness. Okay, and we've broken out of this trend line, and the upper trend line resistance is held. Okay, so that itself again is confirming weakness on the US market. So all eyes on USD JPY, Euro JPY. If they fail to make new highs, then we know exactly where this market's going. Okay, the Wilshire 5000, this is the one that Anna Cooling looks at the most, and what I've been told by others to look at, observe as well, again confirms the H&S formation. Look at that. Okay, left shoulder, head, right shoulder. So my conclusion is the markets are certainly tilted towards the buyer side. All we need now is a fundamental catalyst to propel this market lower, and Bob's your uncle, okay? Or should I say Bernanke's your uncle, or should I say Yellen's your auntie? Okay, so that's basically what's going to happen, is we're going lower, okay? That's my bias, that's my technical and fundamental argument for going lower. All I needed a few more catalysts and the variables I observe as well. So I'm going to be observing the Aussie, the Kiwi, commodities, risk FX, bonds, and obviously the news flow that goes along with it. So keep an eye out for Russia, Ukraine. Technically, this market's telling you that there's some geopolitical crisis that's going to hit the market, whether it be from Asia, whether it be from Europe, whether it be from US. That's irrelevant. Our job as traders is to be prepared. They always say, plan your trade, trade your plan. I've planned my trade. All I need to do is trade my plan. Okay, so that's basically what I'm going to be expecting come Monday onwards. As always, folks, risk on, risk off. Wax on, wax off.